the regulators start to catch up, the hurdle quickly rises, so you have to kind of pay attention to it. I think it's really unique, particularly between Hong Kong and PRC, where essentially it's two different markets, but under this theoretically the same regulator or the same regime, and yet there's two separate sets of hurdles. You have to be kind of aware of that, and you have to act accordingly. But I think the way we try to look at it really is to say, how do you want to segment your market? Andrew mentioned coming in and looking for partners and being kind of an indirect player. And I think there's another way to establish a brand and go after customers in a direct way. And I think ultimately, if you can bifurcate your approach and say that there's clearly a distinct two-step approach, which is one's kind of an institutional approach. Even in Japan, it works that way. You can be a local provider directly to customers in what's the biggest market in the world retail-wise, or you can be a liquidity provider to those local providers, and that's another way to participate in that market. For now, Gain is trying to burn the candle at both ends, which says, let's be a retail brand through our Forex.com, and let's be an institutional provider through our institutional business in GTX, and I think they can peacefully coexist. And it's not just trying to be piggy. I think that they have their own positions in the market. But I also think that if you spread yourself, try to be all things to all people, you come up short pretty quickly in these markets, and that's probably the biggest danger, where we've seen some players that aren't represented up here go in and scattershot and end up failing at multiple levels. So this concept of, Lars mentioned replicating in a certain way, it seems measured, but it feels to me like it raises your chance of success. If you kind of go in, prove it, and then take that proof of concept and reapply it again versus trying to go in, spreading yourself real thin. I think we've seen a few crash and burns, and I don't know, I would argue that hasn't been proven effective yet, the scatter shot. It seems to me that the more measured, reliable place that's a little bit more boring and longer to achieve seems more sticky.
Mm-hmm. Okay, now I would like to, it's usually more easy to talk about success than lack of success, but I still think that it's crucial to learn from, let's say, hurdles on the way. So I would like to direct a question to all of you, and if you can just pick one example of, let's say, a missed opportunity you experienced during your activity in your companies within one of the markets in Asia, and talk a little bit about it. What was it? What did you learn from it? A missed opportunity. And I would like to start with Alex, please.
Thank you.
Well, you're assuming he has a missed opportunity.
No, it's just the focus.
Gosh, that's a funny one to answer, isn't it? I think for me, the missed opportunity that I have is really a product of Citi's franchise and our concern about our franchise and some of the less well-established regulation that exists in some of the really major markets in Asia, so I think particularly around China and India, which really prevent us from playing directly in that space very effectively. It's a source of frustration for me personally, but something we have to live with, and I guess that, coming back to the earlier point that I made, that means we have to understand the nuances of the market, maybe with a little bit more subtlety, and work with people who do have the ability to penetrate those markets themselves. So frustrating for me, I guess, just not to be able to participate directly. It's not a missed opportunity, to come back to what somebody else said earlier on. You still aspire and try to get access to the flow. It's just you're getting it a little bit further down the food chain than you would otherwise. So I think for me, that's probably what I'd focus on.
Lars?
Well, first of all, I'd like to say thank you for the question. That was just what I was hoping. Missed opportunity. Well, for us, it's quite clear that where we have done a lot less than everybody else, a little bit like you, is China. We have never felt very comfortable with the regulatory environment and trying to figure out what you can do and what you cannot do in China. You can always find a lawyer that can tell you can do it, and you can find another one that can tell you that it's illegal. And that has held us back a lot, I would say. We are very focused on our own platform, in contrary to many other brokers that are sort of open for many different platforms. We are that because we're also perhaps a little bit more multi-asset than most. So for us, we try to appeal to people that do not just foreign exchange, but also a number of other things. Frankly, that's not done better anywhere else than our own platform in our view, because most platforms don't have that multi-asset aspect, and at the same time also, as I mentioned before, we're very white label focused. So we could and perhaps should have done more in China, but given that China is very much an MT4 market, given that it's still, in my view, fairly opaque what you really can do and cannot do, we haven't been very aggressive in China. We're reviewing our stance on that because maybe we have been over cautious and maybe we have been over restrictive in our platform selection. But if we look at it, we do very, very little business that is China related directly, and I'm sure everybody else here, at least to my left, is doing much more business in China.
In your personal view, do you see any, let's say, near change in the horizon of that, let's say, confusion when it comes to regulation in China as a Western broker?
Probably some of the other guys are better at answering that question, but as I said, we are reviewing our own position and maybe we are being overcautious. So we will probably, or we will go a little bit more for us also having a fair share of that market. But there are certainly markets around the world where we're more comfortable operating, and we look at things very, very long term. We would rather be sure that we don't have an issue than go into a gray area too early. That being said, I do believe we've been overcautious in China context.
Glenn?
I think you tipped your hand a little bit when you said the word Western, because that we were similar to what Lars is painting as a picture, where I would argue that Gain was into the PRC market very early, around 2000, and started to build a local presence, to Drew's point, with local bench strength and so forth. And then about when we got to go public in 2008, contrary to what Scuttlebutt and the website say, we weren't thrown out of China. We made a conscious decision to shrink back based on Western lawyers who get paid even more than Eastern lawyers, but don't necessarily give higher quality advice, and backpedaled and then re-engaged again. And so I think that was detrimental to building consistency of brand and building a commitment to a region. I think the worst thing you can do is parachute in and bail out and parachute in. That's not a good way to build brand recognition and loyalty, and frankly curry favor with a local market. So that was a mistake. And then, not that I want to be a glutton, but the other mistake I think we made was in Japan. I think that heightened sensitivity or respect for accuracy was probably not something we recognized or emphasized enough. And I think when we acquired GFT, we saw them make the same misstep, which was this concept of you can be close enough. I think the Japanese market in specific order really wants perfection, and unless you're willing to deliver that, you're going to come up short, whether it's with the customer, with a regulator, with a partner. And that probably is unique to that market more than anything else. And I'm not saying that you can have shoddy product, but that market of all really wants perfection. And so you're better off coming in a stage lower in terms of your product features or innovation and having it be perfect, instead of being a little on the edge of cool, but if it breaks once in a while, it's okay because you're in beta version. So that's not a beta version market in Japan. So I think two missteps for us was, one, doing the in, out, in for the PRC market, and in Japan, going in with good enough instead of perfect, because you don't always get a second shot. So I would say that knowing those two markets better would have served us better. But water under the bridge.
So if I may just for 1 minute pause the round of questions and direct another question to Lars. Saxo was a relatively late entrant to the Japanese market, opening the first regulated office in 2008. Why did you guys wait until then?
Well, first of all, we are, we're a pragmatic organization. For us to open up in a new country, we need to have the the pieces in place that we want to have there. This means we need to have a team that we're comfortable with. We need to have a brokerage that if we choose to go that way as we did in Japan, that we feel is manageable and where there's no real big risk of any surprises lurking under the surface, right? I mean, personally, I prefer small deals. I'm not one for big transformational deals, because if those kind of deals go wrong, you have a real issue, right? So I prefer smaller deals where you can afford a couple of them to not work out if the majority of them do. In Japan, we went down that route. The other thing we like, of course, is given that we do all the white labels, if we can take over somebody that actually have been deploying our white label solution, so they completely intimately understands what Saxo Bank is about and how we do business, that is also something that we're looking for. So smaller brokers that use our platform is very much somewhere where we have that consideration from time to time. Would these guys do better being under the Saxo Bank umbrella and operating under our name? And those things came together for us in Japan. We actually have other relationships in Japan, also dating earlier in the white label space. So it's not that we didn't do business, but we didn't go in directly until all of those pieces fell into a puzzle that looked good for us. So that being said, it's been a good experience, and we're happy with what we're doing there. So again, there are many things to do around the world. We have actually many offices, about 26 offices around the world, which I think is one of the higher numbers among the big players. So it's not for lack of wish to expand, but it is really slightly opportunistic. We need to have the exact right combination of factors that makes us comfortable going in. There's always another place you can open. We opened in Brazil in October, and you can say, well, could you have opened Brazil years ago? Perhaps, but I still think we're one of the first to go there, and some places we go early and some places we go late.
Okay, continuing with speaking about missed opportunities.
Look, for us, really, I mean, we only started in the Chinese market about 2 years ago, and I think we really missed out on the early growth phase of the market. And, had we actually been able to get into this market a lot earlier, I think we would have made a bit more of a success of it. And also, our model's typically geared around IBs, as I mentioned earlier. And I think, one of the things that we did miss out on is the clientele that we would have got from direct marketing or having a bigger presence here in the earlier days. And I think, for us, that was probably the biggest missed opportunity.
Yeah, I think for us, and most people, I don't know, much appreciate, but our Japanese business was a joint venture between us and a local player when we started in 1999, and we invested about $250,000 in 4 people that just got let go by a big institution, a big banking institution, and we bet on them. And we were very successful in 2006. FXCM Japan was the #1 volume broker in Japan, and it filed papers to go public in 2007. We sold, because we sold our stake in that company for $42 million in 2007, thinking that we just turned $250,000 into $42 million with the positive carry of 8 years worth of pips, and thought we were the smartest people in the world. And then the Japanese market, from the day that we sold to the day that we got back in 2011, probably quintupled in size. And we talk about a missed opportunity. We're nowhere near the top 5 today. And obviously the Japanese market, everybody knows, is massive. And we bought, 2 small Japanese brokers in 2011, and we started to come back into the market, and we're doing, much better there today. But we were the brand, not the brand, because obviously there's big consumer companies have a bigger brand. But we were the #1 volume player, in the market, and obviously that's something that when we left, that didn't do as well, and that's probably our biggest missed opportunity. Probably order of magnitude, bigger amount of money than everybody else's missed opportunity. combined maybe. But even though we got a lot of things right, and I think we got a lot of things right in Asia, and I'm really proud of the teams we have here locally. We have a few hundred people in the region, and there's people who have been with us for 12 years, 10 years, 14 years. It's one of the best things we've ever done, and that's something that I'm really proud of, and that really drove that success. That we generate a few $100 million a year in revenue from Asia. And I think very few people can say something like that, but probably that number could have been double if it wasn't for that one mistake.
So before we move to the last question, I would like to know whether the audience has some questions to direct to this distinguished panel. Question, anyone? We're bringing a microphone.
Does anybody have a tissue for Drew? I feel bad after that.
Hi, my name is Irfan Pardesi. I'm CEO of a very, very small broker called ACM Gold. My question is actually directed to Lars specifically. Saxo Bank is, obviously it's got a very distinct branding with your multi-asset platform. You guys have always given the umbrella, and as you keep referring to your white labelers, which you cherish and nurture. They take your white label platform, they go out in the market, they obviously use your umbrella, they keep saying they're a white label of Saxo Bank, which goes really well with also what Drew said, that you have a localized presence. And it's not just in local speakers, but these are people who understand their markets. Comes a few years later, Saxo Bank enters that market directly. And in Asia, people don't tend to accept that very openly because they feel that they promoted your product as a white label for 3 years, 4 years, 5 years. They created a brand, and now all of a sudden Saxo Bank enters that market. In my humble opinion, what I've seen in Western Europe with that, I've seen some relationships going down, but how do you see that happening in Asia? Because here, even in IB, the first thing he asks you is, will you give me exclusivity? So I'm assuming the white label also asks you for some sort of understanding. And how do you feel that white label at the same time as Saxo Bank itself going into market? I mean, why would people take your white label first, and why would the customers actually go to the white label and not to you?
That's a very good question, and you're absolutely right. We often hear people asking for exclusivity in an area. For a very simple reason that we actually, I think, have close to scientific proof that it helps everyone when we go into a market, because just as you go to the street where there's one pub, that's going to be completely empty. You go to the place where there's 20, it's going to be packed with people, right? So you'd have thought, oh, that's bad news. I got a lot of competition here. We can see that in the markets where we go in, we assist our partners in building that business. And I'd also say if a white label doesn't add something in terms of local understanding, as you're saying, or additional capability or research or education or whatever, I mean, well, what's the purpose in a way for us to have them? So the people that we have, they differentiate themselves. You can see a market like Portugal, funnily enough, where people think everything is going down the drain because of the euro and all that. We had a record year in Portugal in 2013. Many of our partners, we have 6 white label partners in Portugal, essentially building white labels on Saxo Bank infrastructure. Recently, they started publishing a derivatives market share list, and people that are using our platform are something like number 1, 2, 5, 6, 8, and 10 on the top 10 list, right? We do 78% of all derivatives in Portugal, believe it or not, is done on Saxo Bank's platform. Nevertheless, these 6 parties, they live happily together, and they actually expand the business together by setting some sort of common standard there. So it's a very obvious question, but the fact is that actually we believe, and people when they have coexisted with us in some markets, we believe that it adds value to them, that we are also there. And there's one thing that's for sure, is that it is the key to instant dismissal in Saxo Bank. If we ever found out that you tried to move a customer from a white label, that is an absolute no-go, and everybody knows that, right? So I don't think there is an issue there, quite the contrary. One thing we're playing with a little bit is in some markets that we actually go a little bit higher up in segment because we see anyway our client base going up in segment, and I would think of most of the brokers up here, we clearly have the highest average account size. Our average retail account is like $60,000-$70,000. So that is anyway a market where many of the white labels, they go for somewhat lower in segment, and we're actually testing in a couple of markets a concept that we move our own minimum account to something like 100,000 euros or thereabouts and leave everything else to partners. So we're very conscious of trying to be good partners, but also I think it is necessary for us if we see a country where something could happen and it's not happening through our preferred mode, which is partnership, then we will go and have a look at it ourselves.
Any other question? Yes, sir.
Hi, my name's Andrew from Security Trade. I was just wondering, in the UK press there's a lot of talk about HSBC moving its headquarters to Asia. And when you guys deal with essentially internet companies, why, when you're talking so much about Asia being so key to your future, and the markets in the US, North America, and Europe coming under more and more tighter regulation, have you ever considered moving your headquarters out to Asia, or doing a co-listing? Or maybe you have a co-listing out in Asia, but I know two of you guys are listed in New York, I think.
Yeah, I think we, I talked to my wife for probably a few more years to convince her to do that. But I think it is usually that type of stuff. It's more that if a company started somewhere, there's a legacy inertia, right, of management that's there and things like that. But if you look at FXCM, we didn't just move a bunch of calls, like a call center or something like that, to Asia. We moved a lot of management to Asia. We grew a lot of the employees we had into management in Asia. So a lot of the center of gravity of the firm has shifted to Asia. So, and I think that is, most people don't give the region enough respect and treat it as these are clients that we can do anything with. These are cheap labor, employee-wise, not creative people and all that stuff. And all that, I can tell you from being here for 14 years, is untrue. And the more respect you pay to clients as if they're American or British, clients, and treat them as if you had an American or British regulator looking at you, the more they pay you back. The same thing with employees. If you treat them like your U.S. employees or UK employees, and you give them that autonomy and authority and the ability to make decisions, I think, and you shift the center of gravity here, and we had to because of, that's where the clients are. I think that's what pays dividends. So, I mean, nominally our headquarters is in New York, and the bureaucracy around the listed company has to be in New York because of the, all the U.S. finance stuff around being a public company. But, the reality is that, we have a decent amount of management that's here. So for all intents and purposes, a lot of the headquarters has moved, to Asia. And I think that that's something that, there's no way you're going to be a big firm in this region without moving decision-making to this region. And every time I come to visit here, there's a new epiphany that somebody on my staff says, yeah, I've been talking to you about that for like 3 years. And you have to hear it for yourself from the client to say yes to it. And so I still fall into that, all the time. Had I just listened to the people who have been telling me that, they would have done this earlier. And so there, even with what we have done, there's still gaps. So I would say, if you plan to be big in Asia, you got to move management to Asia, and you got to have Asians in management. And that's kind of the two things.
So I would like to ask one last question. I know forecasts are of course a problematic thing, but I would like to ask each and every one of you and try to answer independently from your business. Taking the near term, let's say next 5 years, what will be the most conspicuous. The biggest trend that the FX industry will experience within Asia. And Andrew, would you please begin? The rest have time to think about their answers.
The biggest trend, I mean, it's a hard one to really answer. I mean, we see a lot of different products that are even in this expo. You see binaries, etc. I mean, whether that'll take off in Asia, I don't know. I mean, there's certainly, I think by last count, there was about 10 exhibitors out there in binaries. So maybe that'll be the next big thing. I mean, for us, you know, we're going to continue true to our model. We're going to remain an ECM broker and just focus on transparency and really, you know, continually focus on volumes. We don't intend to change that. I mean, we've offered CTrader. It's an additional platform. It gives people a little bit of variety. We're offering Tradable, which will be another platform. And we remain very agnostic. So, you know, we've geared our model so that if there is a new trend, we'll just add another platform to the system. And, you know, we're not really, we didn't build our own technology, unlike some of the other speakers on the panel. You know, we've outsourced a lot of the functions, and we've invested heavily in IT that really allows us to do that. So, you know, I don't really know what the big trend is, but, you know, what we have done is we've built the infrastructure around it, so when we do identify something that we think will take off, we'll certainly, you know, be in the right place for it. And, you know, that's essentially how we've structured our business at this stage.
Alex?
So a trend that we've seen really strongly in the last 18 months or so that I think still has legs, not sure for 10 years, but for a while, is client-to-client dealing. And I'm talking here at an institutional level, non-bank to non-bank dealing. And as a big prime broker, we find ourselves facilitating more and more and more of that. The other day, we did a little sort of chart looking at all of the relationships that we facilitate through primarily client-to-client relationships, three-way PB agreement.